Get the latest on what's going on this earnings season, meets, beats, and more in Zach's Earnings Scorecard.
Retailers are in focus here. Eric Dutram, who is the editor of Zach's Surprise Trader, is going to talk about how they're faring out this earnings season. Overall, not so great, right?
Not great at all to start things off, Terry. If we look to the chart here, we can see over the past month, we got the S&P 500 versus the retail ETF, which is XRT, and we can see we're almost at a 9% loss for XRT over this last month here. And, this is despite the S&P 500 hasn't been great, but it's been trending down a bit. But as we can see, there's been a much rougher trend for XRT here over the last month. That's due to some weak earnings, a lot of concerns over Amazon, and their eventual world domination, it seems. So, people are really starting to freak out about a lot of retail names. And we have a couple more companies left to report, so the pressure's definitely going to be on.
Yeah, now that's not to say that individually you won't find some standout performers. Like Home Depot, they've been holding up pretty well.
That's right. Home Depot's been a relatively solid performer, and, sort of this home improvement space is a little more insulated than, like clothing from some of these online competition trends. Yep. I think that's really helped them out over the last couple of years. This actually is a Zach's ranked #2 stock. It has a B for its VGM score, so pretty solid metrics coming into the report. And if we look to the recent chart, we can see that for their surprise history, the company hasn't missed in 5 years. So it's been a really great trend for Home Depot. And as we can see, the stock was about $31 a share back 5 years ago. It's shot up to about $136 over the time frame. So some nice, strong, steady growth. We are seeing a earnings ESP of about 1.5%. So you combine that with the Zach's rank of 2. That's a pretty good indicator of a beat. And the company reports tomorrow before the bell.
And tomorrow is the 17th of May.
Yes.
Then you're looking at Target. So what factors are in play here?
So Target's an interesting case this earnings season. There's been a lot of questions about Target. There's been some boycotts going on over some of their policies, and some investors and analysts are worried this is going to really start to impact their sales. As we can see in the chart, the stock has really started to take a little bit of a dive here in the past week to 10 days here as some of these fears have sort of materialized. We saw that the company missed in the last earnings report, so that's not really a great trend right here. Earnings estimates have at least stayed stable and have moved a bit higher over the last month or so. So that's a positive for Target going into the report, and they actually report on Wednesday before the bell. We're not really seeing anything in terms of their earnings ESP. The company does have a VGM score of A, so that's a good sign, but it does have a Zach's rank of 3. So not a whole lot of high expectations for Target heading into the report, but it's really going to be a question of, if they can put some of these fears over this boycott to rest, and if their guidance is solid in face of these continued online pressures.
All right, and then Walmart. Now, they're accelerating the rollout of their mobile payment service.
Yeah, Walmart's another interesting case, and they actually need a little bit of growth here if they're going to sort of return to their former glory. We all remember the days when they were basically the only game in town for a lot of retail.
Yep.
But as we can see in this recent chart, if we look to the past year and a half, a lot of concerns have started to materialize for Walmart. We can see shares have gone from about 89 down to 66 in the last year and a half. The stock does have a VGM score of A, so that's a good sign. It's got some good fundamental metrics, A for value, A for growth. It only has a Zach's rank of 3 hold. And as we can see, a lot of the estimates have kind of run down in the past 6 months or so as well. We can see this kind of bottoming out here for both the 2016 and 2017 metrics. A lot of these issues are due to higher costs, and that's going to be something investors are going to want to hear more about when they report on Thursday before the bell.
All right. And then the Gap. Now, they've been struggling lately, too.
That's putting it mildly, I think. And a lot of these apparel companies have really been hit hard by this, online trend and, just changing consumer tastes as well.
Yep.
Analysts almost universally dislike this stock, as we can see from some of the recent changes to estimates. 15 estimates have gone lower in the past week out of 16 estimates, and then 15 lower for the full year as well. And usually this might not be a big concern, but you got to look at the magnitude of these cuts. And if we look to the sort of the pace of the cuts for Gap earnings estimates, we can see that about 90 days ago it was at $2.39 a share in earnings, and now we're at just $1.93. So a pretty big decline. And actually, if we consider that $2.39 is pretty close to where their year ago estimate was, and then now we're at $1.93. investors are basically expecting about a 20% earnings contraction for the full year. So not a great trend. Probably looks to fall in the footsteps of some of the other companies that reported last week and really struggled. It is a Zacks rank number 5, strong sell. So not really a great trend coming into the report, and a lot of analysts don't really like the stock either. So it's hard to get too excited about them coming up for their report after the bell on Thursday.
All right, thanks for keeping tabs on these. Do you own any?
Do not.
All right. Check out more earnings information on our website, Zacks.com. Even though we're coming up near the end of this Q1 earnings season, there's still a lot there to peruse through. So get on over to the homepage, link to it all from there. With Eric, I'm Terry Ruffalo.